why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. The probabilities are now solidified, and that's actually bullish for tech.
Because
Tom Lee discusses the strong market performance in 2024, driven by cash reserves and optimism for the year ahead. He attributes the rally to megacap companies, which benefit from falling interest rates, and expects stocks to finish the year strong. Lee also anticipates a Federal Reserve rate cut, which would support the economy and stock market, and emphasizes a Trump put, pro-market policies under President Trump's second term, encouraging risk-taking by investors. Lee forecasts that the S&P could reach 7,000 by mid-year due to optimism surrounding the new administration. However, he expects a weaker second half, influenced by macroeconomic risks like geopolitical tension. He believes megacap stocks like Nvidia will be crucial for the market's performance, as their strength will dictate the likelihood of a rally.
Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise?
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
The CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5 after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that is a substantial part of your outlook for the new year, the Trump put. Explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much. and what the impact is going to be?
Yes.
Hey, thank you, Eamon. Eamon Javers, Nvidia, joining the big cap tech party that we're seeing going on today. Apple, too, shares hitting all-time highs right now. The tech giant releasing new versions of its iPhone, iPad, and Mac software that include the long-awaited ChatGPT integration with Siri. There are also reports that Apple's working on an AI chip with Broadcom. Broadcom shares are rallying big today as well.
You know, it's funny, Rob. I heard a lot of folks say, well, if Nvidia stumbles or if Nvidia doesn't do anything, the market as a whole is going to have a problem. Not really. Not really, because that stock hasn't done anything. Certainly not month to date. It's the laggard since the election, and these other stocks have picked up the slack. So maybe those calls were not correct. Does it matter, though, at some point if Nvidia doesn't work, given the size of the stock? I mean, we're talking about Apple near $4 trillion. So Nvidia is not even the largest market cap stock in the market anymore. It was for but a hot minute, but that's about it.
Well, you know we own that, Scott. We bought it when it got a little cheap here midway through the summer, and you know, occasionally these names are going to give you opportunities. So getting back to your point, are we buying the Mag 7 or not? I think you got to be selective. And when you look at the Mag 7, you have names like Google, which was a laggard year to date until here recently. But if you just look at the fundamentals of a business like that, its PE's trading at 20 times, right in line with its history. It's the cheapest of all its Mag 7 peers. Profitability is among the highest, 2 times the sector average that it competes in. High capital efficiency, 3 times the sector average. And they're starting to see a return on AI. So while we own all these, it's the when matters of how you buy them.
Why have you fallen out of love with Nvidia?
So we haven't fallen out of love with Nvidia. We still love Nvidia, but our one concern is its recent price action. I would argue that Nvidia is going to dictate whether or not we have a Santa Claus rally or not. It is still one of our largest holdings, but it's broken the 50-day. Now, we do think that it will ultimately break back through and get to new highs as we go into January. But if Nvidia breaks, it will take the rest of the market down with it. That's one of the problems when you have a name that's so highly concentrated and highly owned. But right now, we would be buying this dip in Nvidia, but being a very short leash if it does continue weakness. But you can't have Nvidia not rally and have the market rally. That, in our opinion, I don't think that's going to happen.
Okay, looking at the movers, let's start with Nvidia.
Some news out of the Supreme Court on Nvidia. So Nvidia was sued by shareholders for misrepresenting their reliance on cryptocurrency mining. Nvidia appealed that. The Supreme Court today, in a one-sentence opinion, said the case should not have been taken up, but the practical effect of that decision and their wording means it can proceed.
That's a little complicated, isn't it?
You think?
I do, and Nvidia's up.
Hey there, Carl. We had a Supreme Court decision this morning on Nvidia. Now, the Supreme Court is saying it's not going to take up a case involving a shareholder lawsuit against Nvidia. They say that was improvidently granted initially by the Supreme Court, meaning basically, oops, we're sorry, we shouldn't have taken up this case in the first place. So what that means is that the lower court ruling involving Nvidia will stand. The lower court allowed a shareholder lawsuit against Nvidia to proceed. So presumably that will now proceed apace. All of this is about an initial shareholder lawsuit against Nvidia, suggesting that Nvidia did not properly disclose how much exposure it had to crypto mining as opposed to gaming in terms of use of its chips. The idea here is that crypto mining is a much more volatile segment than gaming, and if they didn't disclose properly how much people were using chips for crypto mining, that might have given investors a bad feel for how volatile potentially the earnings would be back in 2018. So this case now suggesting that that lawsuit can go forward also has some impact potentially for other publicly traded companies that are deciding how much nuance to share in their disclosures as they file with the SEC. How much detail and sort of investor insight do they need to provide on the mix of customers they have, the volatility of that customer base, all of that. So this will give people across corporate America something to think about here, and it gives a potentially new risk to Nvidia that they might have to settle this shareholder lawsuit at some point down the road, guys. We've reached out to Nvidia. We'll bring you their comment as soon as we have it.
Okay.
Tom Lee discusses the strong market in 2024, fueled by cash reserves and optimism for the future. He sees megacap stocks benefiting from lower interest rates, with a potential Federal Reserve rate cut boosting the market. Lee also highlights the Trump put, predicting that pro-market policies will drive investor confidence. Looking ahead, Lee expects the S&P 500 to reach 7,000 by mid-year, though he foresees challenges in the second half due to macroeconomic risk. He stresses the importance of stocks like Nvidia in sustaining the rally. Do you agree with Lee's market predictions for 2024? How important will megacap stocks be in shaping the market next year?